The bursting of the tech bubble at the start of the decade has had a lasting effect. U.S. stock mutual funds with the biggest losses in the past 10 years haven't recovered from that sell-off. Bloomberg reporter Charlie Stein has been tracking the performance of some of these funds, and he joins us from Boston. Hi, Charlie. Great to see you.
Thanks for having me on.
This was a fascinating story because for so many of us, that tech bubble boom, well, the tech boom and then the bubble that subsequently burst seems like ancient history, but some of these funds are still feeling the effects.
It's really true. You know, what struck me when I looked at these funds is that we're so absorbed with how bad last year was, we forgot how bad the early part of the decade was. And if you were invested in tech, which most growth funds were at that time, you kind of fell so far, you basically couldn't crawl out of the hole.
How have these funds changed in terms of personnel? Maybe some have consolidated, I think you referenced in your piece today, since then.
There's been a lot of changes in the mutual fund world, and on most of these funds, the managers who ran the fund back then, most of them have been replaced, and the performance in more recent years tends to be kind of middle of the pack. But when you lose 70% of your money in a 2.5-year period, which these funds did on average between 2000 and later 2002, it's a long way back to zero, and they didn't get there.
Now, how are they going about regaining inflows, even just simple confidence?
Well, it's very difficult when you're down that far, but the performance more recently has been better. If you think about it, this year technology was one of the better performing sectors. A lot of these funds did very well, up 30–40% this year. But people have long memories. When they've lost 60% or 40% of their money, they're not going to be all that keen on sending you more money, and it's probably going to take a while for these funds to regain investor confidence.
And can we talk about which funds in particular you're investigating here?
Well, the one that did the worst in the course of the decade was Fidelity Growth Strategies. It was actually down 67%, and what's kind of amusing is they changed the name of the fund. It used to be called Fidelity Aggressive Growth, and they decided, I think, maybe it needed a fresh start with a new name, but still 67% is a lot. And the next worst was Vanguard U.S. Growth. It was down only 50%.
Were there any tech mutual funds from that era that have actually been able to 100% turn around and recoup those losses? Or at least, who are the outperformers?
It's an interesting question. I don't really know the answer to it. I think the basic problem is math. If you started with $100 and you went down to 30, it's a long way back up to 100, even if you did better. So you really needed some spectacular performance after the tech bust to come back. In fact, if you went back and looked at that period, you'd see that value funds did very well in that period, and they probably had they definitely had a much better decade.
Interesting stuff. Bloomberg's Charlie Stein, thanks a lot.